making its round on the internet. I'm not sure if you came across it. Roger Federer gave a commencement speech. I believe it was last year or Dartmouth. Did you come across this? No, this is fascinating. So, one of the greatest athletes and tennis players of all time, Roger Federer, gave a speech, and this particular speech appears like to be one of these like ones that are going to stand the test of time. In that speech, he dropped a quote. He asked the graduates how many points in terms of percentage do they think he won in his tennis career. You have a guess?
Well, more than half, I guess. Otherwise, you wouldn't have been world champion. I know, like 70%.
Yeah, that's a sensible answer, right? If you've won all these grand slams and you've dominated for 20 years, right? You must have won some larger amount of points. But he said he only won 54% of his points.
Yeah, fair enough.
And I thought that's a pretty useful thing for us to think about just a little bit, because it gives me similar feelings about investing, because we know we're not going to be right. When we know not only are we not going to be right, it's impossible to be right all the time. And we're going to be wrong, and feeling wrong feels bad because we lose money when we are. And that, for many people, scares them off. But that would be the equivalent of saying, like Roger Federer saying, I'm not going to play tennis anymore because I can't. I'm the world's best and I could barely win, literally barely win more. Statistically, I win as much as I lose. That's his point. So where's his edge come from? How do you only win 54% and yet be one of the world's best? And I think if you dig deeper there, that's where there is an edge to be had, where in a sense you win the points that really matter, is one way of saying it, or you make the kinds of investments that really matter, or you take advantage of setups that are really in your favor, which is done through due diligence and time and a kind of prolonged period of honing your skill set and so forth. But it certainly is not about quantity. And that's actually, now that I'm rambling and running my mouth, it does go back to the point I was talking about last episode, I think, or 2 episodes ago, where I felt, or maybe it was just on our Patreon, where I was looking at my King of the Jungle portfolio, and I was really pleased at only having 12 positions. Like, it just felt kind of good. Like, oh, yeah. And I think it's something to this point, right? Like that 12 feels manageable. Therefore, I could keep my eye on the ball, so to speak, with only 12 positions, so to speak. So that confidence kind of grows, and I can make more aggressive bets, and the bets that I win matter more. So even if, you know what I'm saying? I don't know how that resonates with you.
No, it totally does. And if we think about that Federer percentage, like he can be the world champion and he can only win like just a tiny fraction more than half of his points, and that's still enough. And as you say, like it's the ones he wins are important. As an investor, like you can get way less than half of your decisions right, and you can still be a successful investor because of the asymmetry. Like when you get an investment decision wrong, you might lose 20-30%. Like in like a Teladoc case, you might lose like 90%, but they're pretty rare, to be honest. And it's very rare that something literally goes to zero. Does happen. When you get it right, often it's like a 200%, like 100% gain. You've 2x'd or you've 3x'd. And I've got a couple of like 50 times returns. I've got a 250 times return in my investing career. So that 250 times return, I can only have to get one decision right out of 250 if you look at it that way, like way less than like a 0.4% of a whatever, 0.25% of my decisions I have to get right. Obviously that's extreme. You're not going to run into many 100 baggers plus, but if you're lucky as an investor, you might have a handful in a lifetime. And that allows you to make a lot of bad, in retrospect, bad decisions that didn't play out well because the few that you got right really won the game for you.
I think this is a bigger point than I originally anticipated. I kind of just wanted to drop a cool kind of fact with you tied to investing, but we know that. So when I listen to normal people, meaning like normal people, most people who aren't investing in individual stocks, almost all of them, at least extraordinarily high percentage, say something to the effect of, I can't, it's a game I can't win. You can't possibly get everything right. It's this point that they kind of miss. And I think this is why Federer was hinting it to the grad, saying it's not about being right, not even most of the time. You just barely, you have to just break even, but the quality of your of the things that matter have to be on point. And that's a huge insight.
And there's a whole host of other reasons why people, play the stock market and then figure it's rigged and they can't win. Like, I'm using deliberately like loaded language there, because of all the other disciplines they get wrong. A stock is up, a position's up like 20 or 30%, and they're like, oh, I've got to lock in the gain, protect. It's like I'm playing with house money. These are all completely flawed concepts, right? If you just keep it real simple, does the thing I own, do I understand why I own it? And B, do I continue to believe that that thing is true? If A and B, then just continue to own it. And at some point, portfolio management kicks in, and you need to like manage your exposure to one particular like possible risk. But these are kind of the advanced things. The easy stuff is just buy great quality companies and hold them for a long time.
Amen.